Good morning and welcome to Business Today. We're going to count down to market opening. Let's first get you all the headlines this morning. Capital markets regulator SEBI clears several big proposals in its board meet last evening, lowers costs for both investors and mutual fund companies, replaces 30-year-old stockbroker rules in one of its biggest regulatory overhauls yet, lowers mutual funds expense ratios but also excludes taxes and government fees from them. Indian stock markets seen under pressure after big tech drags Wall Street down overnight over AI funding jitters. Oracle, Google and Amazon lead the fall over debt levels needed to sustain AI investments. Asian markets are also in the red. Investors nervously wait for US inflation figures later this evening. International brokerage Jefferies gives us a 20% upside to the Nifty in the next 1 year, sees the benchmark index at 28,300 by December 2026. Says the returns will come from BFSI, auto, cement, telecom and utilities. According to Jefferies, the big clincher will be corporate earnings. Pressure on the biggest American companies to disclose the impact of Trump's immigration policies on hiring. Shareholder group wants Amazon, Walmart and Alphabet to reveal how changes in the availability of skilled labor will hit their long-term performance. Focus is on the crackdown on H-1B visas and their enhanced fees. Google enters the credit card business, launches its first ever credit card globally in India with a RuPay card which can be linked to UPI accounts for payments. Also offers industry first instant cashbacks and rewards. Google has tied up with Axis Bank for the card. Meanwhile, Donald Trump has once again justified his tariffs, calling the word his favorite. In an address to the nation earlier this morning, the US president claimed they were responsible for a record $18 trillion in investments promised this year and said the US is once again the hottest country in the world.
I've secured a record-breaking $18 trillion of investment into the United States, which means jobs, wage increases, growth, factory openings, and far greater national security. Much of this success has been accomplished by tariffs. My favorite word, tariffs, which for many decades have been used successfully by other countries against us, but not anymore. Companies know that if they build in America, there are no tariffs, and that's why they're coming home to the USA in record numbers. They're building factories and plants at levels we haven't seen, AI, automobiles. We're doing what nobody thought was even possible, not even remotely possible. There has never, frankly, been anything like it. 1 year ago, our country was dead. We were absolutely dead. Our country was ready to fail, totally failed. Now, we're the hottest country anywhere in the world.
All right, we're now joined by Shailendra Bhatnagar, Chief Analyst and Editor Markets, and Gaurang Shah, Senior VP Geojit Investments. Good morning, gentlemen. Let me kick off with you, Gaurang, because I actually want to pull up the Jefferies report, their outlook for 2026, pegging Nifty at 28,300 by December 2026. That's a 10% move, and they're saying the growth will be driven largely by corporate earnings, hot sectors, auto, and I know you like auto, cement, financials. They're also looking at telecom, real estate, utilities, and saying that equity supply pressures will be limiting index level gains. That's the verdict coming in from Jefferies right now. What's your take on the report, Gaurang? Are you going to tell me the 28,300's easy peasy?
Thank you so much, Abha, for having me on the show this morning. Good morning to all the viewers of India Today and my good friend Shail, and to you. A small disclosure, all recommendations are a part of our research team recommendations from a long-term point of view on the fundamental side. Our company, Geojit, or I, we do not have any financial interest, no conflict of interest, but we give advice to our, and no financial interest, but we give advice to our clients on similar lines. They might have their investment interest. So, Abha, 28,300, my view is that we have the capability, capacity, and the wisdom to do much better. I think in the next year, calendar year and financial year, a lot of policies that have been put in place in this year will start showing its positive effect. Along with that, the only lingering concern, Abha, if you will, is the long stretched awaited tariff deal between US and India, and I'm not in absolute hurry. I think as much as time needs to be taken without any hurry, and see to it that it is beneficial for both the countries and of course the growth for both the countries. On the earnings front, I'm very much optimistic about much stable and growth oriented earnings for the India corporate. And in terms of certain data points, we are good on GDP, we are down on inflation, we are doing good as far as interest rates are concerned. And I think third, fourth quarter earnings and the budget, which will be unfolded very soon next year by the Honorable Finance Minister Srimati Nirmala Sitharaman, should give a lot of tailwind to our markets. So I think it's just a number. Honestly, I think we have the capability and capacity to do well. Sector-wise, my sense is banking and finance, autos, cement, cap goods engineering, defense, and FMCG, consumption-related themes will do well.
Okay, fantastic. And we'll come back to some of those in just a moment. But counting down to market opening. And remember, we're expecting a bump up. Also, SEBI announced major decisions yesterday after its board meet. A broad market reset from mutual fund fees to stockbroker rules to how IPO shares are locked in and disclosed to investors. The regulator has slashed and unbundled mutual fund expenses and overhauled 3-decade-old stockbroker regulations. Let's take a look at how the markets are opening this morning. We've got a slight negative downtick regardless on the screen. Just a touch in the red, 25,787. We're probably expecting a slightly better opening, but currently still looking a little tepid in the markets this morning. Just pulling up some of those gainers and losers for you, but to complete also what I was saying about SEBI, and while of course they've overhauled all those regulations, they've also pushed brokers to show every cost and complaint trail to clients. IPO norms have been eased with a tech-backed system to mark pledged pre-issue shares as locked in, making life easier for promoters while tightening guardrails for public investors. And a revamped investor charter for brokers now forces clearer rights, timelines, and a stronger grievance redress system across scores and online dispute resolution. So these are pretty significant rules, and we'll get Gaurang's take on this as well. Gaurang, it's a quiet opening, so I'm just going to pull up SEBI's key reforms and get your take on them. I would have thought the market would have been celebrating them a little bit more.
Well, Abha, look, the growing number of interest among the retail investors is 100% and purely displayed with the kind of inflows that asset management companies have been getting. And the fact of the matter is, Abha, that despite of the relentless selling by FIs and Nifty, so my sense is that bringing in transparency, clarity, and discipline is the need. And I'm glad that these changes have been put in place. And some of the regulations were very, very old. You have to move with the time. Along with this, just about yesterday and day before yesterday, we saw 100% FDI opened up in insurance. So I think these are all bold and measured steps which will bring in a lot of clarity, discipline, and have more attraction towards the customer base and increasing that. The data that we have been seeing in the last couple of months, flows for the asset management companies, has more from the tier 2, tier 3 kind of cities and semi-urban and rural India. So if that's the kind of crowd that you're going to attract for investing into equity market via mutual funds, SIPs or lump sum investments, I think it is prudent to have discipline, clarity, and regulation in place.
All right, let's also take a look at those opening ticks and pull up some of those movers for you. And it looks like Meesho is again making a lot of noise. Let's pull that one up for you. Remember, yesterday we saw a big bounce and there were quite a few buy calls coming in. Today, again, 7% higher. Remember, this is an extremely recent listing right now. But let's take a look at the weekly if we can, because you're looking, I think, easily at 13-14% for the week on a Meesho already. 36%, pardon me, 36% on a Meesho this week. Shail, good morning. Let's talk about some of these movers and shakers. And Meesho, the markets are just going after this stock like nothing else.
Well, good morning to you, Abha, and a very warm welcome to my very dear friend Gaurang. I have little or no faith in any of these research reports that are coming out on Meesho or on the Nifty for two reasons. Meesho in particular, well, these are all signs of stocks being distributed post IPO to retail investors by coming out with these glorious and reports promising sunshine for the next 1,000 years. It never happens. So this is just distribution.
So cynical.
And all of us
Shell,
will.
So cynical. It's actually double the IPO price. And yes, okay, maybe a word of caution there. But because he's being so cynical, I'm going to go straight across to Gaurang. Gaurang, are you in sync with Shell here, or do you see some light in perhaps some of the opportunity that is being seen in Meesho and what it's delivered so far?
Well, I loved the statement made by Shell, sunshine for 1,000 years. That's wonderfully put, honestly speaking. But Abha, look, 111 was the price at which the IPO shares were issued to the investors. And if you're going to run at the stock at current levels, I think you are possibly, being too adventurous. There is no need to be Robin Hood. खतरों के खिलाड़ी खेलने की जरूरत नहीं है आपको शेयर पर. So there are better stocks. I mean, look at I just saw yesterday some foreign brokerage house came in with a buy report and the target was, I think, 220 and it has already crossed 230 today. So as a disclosure, Abha, we had come out with a subscribe recommendation on Meesho for the IPO. It's more than doubled your investment in a matter of just 1 week, if I'm not mistaken. And from here on, one can expect a little bit of correction because the stock has been rallying for almost about 1 week. And right. Valuation is something that needs to be justified, and one has to be wary that there is something called gravity on this face of earth.
Okay, I like that. I think it was a slightly more fair assessment on Meesho. But let me also pull up all the action on AMCs this morning because we're seeing huge volumes across. And remember, SEBI, again, as Gaurang also spoke about, has issued final mutual fund regulations for 2026. They're broadly neutral for AMC earnings. New TER framework introduces a base expense ratio with stat levies charged separately on actuals. Just showing you the gains this morning. BER limits reduced by around 10 bips to offset the structural change as well. And an additional 5 bips allowance for exit load schemes was removed. Brokerage caps were rationalized with cash market brokerage reduced to 6 bips excluding levies. And sensitivity analysis indicating that the net TER impact of this will leave profitability largely unchanged. So some of those decisions from SEBI on the insurance bill leading to a big move across the board when it comes to the AMCs this morning. Let me get a more detailed perspective from you as well on that, Gaurang. Gaurang, on the insurance bill and the impact, I was going to get your perspective as well, if you can hear me.
Well, so Abha, like I was mentioning, regulations, discipline, transparency, clarity, I think it's the order of the day. And as far as let me give you a fair view about the Indian capital markets as to what we think in the next 3 to 5 years. So if you are of the opinion that the Indian capital market is going to grow at maybe 12-15% run rate or more, I'm talking about the indices, Sensex and Nifty. And within that, sectorially and stock specific can give better returns. And if you compound this for the next 3 to 5 years or maybe more, then you will get a fair idea as to where we are going to land up. In this, if your Indian capital markets are going to do well, Abha, I think strong, fundamental, sound companies, whether they are platform providers, service provider or intermediaries, they will do well. With the changes that has been brought in last evening by the Honorable Chairman of SEBI, the reaction is that we are looking at AMC stocks being in the positive trajectory. We like 2 names over here, Abha, HDFC AMC and Nippon India. These are the 2 asset management companies that we are positive on from a long-term point of view.
Great. Shell, let me bring you in as well. Of course, on the move we're seeing on AMCs this morning, as well as some of the other movers. I just want to point out Antony Waste Handling Cell. They've secured new contracts worth 1,330 crores and the stock is up 10%. Let me bring that one up for you, just mark it. And then, Shell, going back to you on some of the moves that we're seeing across AMCs this morning.
Yeah, Abha. So there was this fear in the market that the erosion in a TER, which is the total expense ratio for AMCs, their bread and butter, would be brought down to a manner which would be inimical to long-term, income and growth and profit levels. Well, SEBI has not moved in that fashion and provided enough cushion. So this is again buying that is coming back into HDFC, AMC, ABSL. You have NAM India 6% high on very strong volumes. So it's a relief rally that is coming in, and we all know 30,000 crore rupees coming in the form of monthly SIPs. Look at the oversubscription in ICICI Pru AMC that is about to list. So this is a sector where you have very, very long highways and very, very strong potential of financialization. So it's a win-win.
Great. So, we were expecting some move on the back of some of those SEBI's norms, and it's finally coming in when it comes to those AMCs. We're seeing action across the board there. And remember, we've also had other reforms this week with regards to the 100% insurance FDI, and we've also seen that play out as well. So overall, in terms of the kind of momentum we're seeing on the reform front, whether it be what's come in from SEBI, whether it's the insurance bill, this is really what's driving the market in terms of assuring them that things are moving forward. The reform agenda is something that is definitely a positive, as Gaurang also just elucidated there for you. Shail, what else are you tracking? It's 9:25. What's looking good to you?
Well, I'm looking at the rupee, and that's the pain point in the market. Again, 90.36, showing signs of further weakness, and that's pushed the IT index to 1.3% higher. For those who have a little bit of memory, we've been advising ITBs since 33, 34 rupees, and that's a trade that's worked very well. Strength in TCS, strength in Infosys, strength in Wipro, and look at where ITBES ETF from Nippon India is now at 42. Still is offering a lot of opportunity for long-term investors, but please consult your advisor before you step in. HCL Tech, days high. You have TCS, days high. Infosys, Emphasis, days high. And who can forget Vedanta? So going is good, Abha.
All right, a few other brokerage reports. We've got BofA on an upgrade on Voltus. We've got JP Morgan with an overweight on Tata Motors. And Jefferies downgrading a Hero Moto. So closing comment on Auto Gaurang, because I know it's your favorite. And I know Aisha usually is the one that tops the charts. But we've actually got a downgrade on Hero coming in. Is it because it's, they're seeing demand fading is really what they're saying. But on the back of the GST momentum fading. What's your pick in the auto space, and would you agree with this assessment?
No, I'll beg to differ, very honestly. And we've been positive on autos. We continue to remain positive on autos. Abha, I would also want to, it's very interesting. I think it's according to what I've realized, we are in the month of December and we are seeing new launches. This has not happened before, right? Because normally in the month of December, auto manufacturing companies, they normally come out with the discounts and they defer their new launches to next year. Because if you launch it in December next year, it's kind of a mentality or approach that people have. So November, December, we've seen good number of launches. We are positive on two-wheelers, three-wheelers, four-wheelers, commercial vehicle manufacturing companies, and also a company called Electra Green Tech, which is a pure EV play. And of course, along with that, we're positive on batteries, tire manufacturing companies, we are positive on OEMs. I don't think that there is any reason to worry from a long-term point of view. And my sense, Abha, is that export market is now opening up as a big opportunity for Indian automobile manufacturing companies.
Yeah. All right, great. We leave it there. Auto, of course, in focus today, also on the back of all the Grab 4, Grab 6 norms that have been introduced in Delhi. EVs clearly seem to be the way to go. We leave it there. Thanks so much for watching.